Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 11th day of February, 2014. Let's take a quick look at the numbers. The Dow is up 137 points. S&P is up 14. NASDAQ is up 27. Gold is up $16, and crude is down 15 cents a barrel. Looks like all green on my screen, with the exception of the crude, down again just 15 cents a barrel. The big news today, Janet Yellen confirmed testifying before Congress. She first delivered a prepared statement, which was available to the masses, or at least to insiders, such as our partner Jerry, who got his hands on it. I think it was available to the public. But anyway, she delivered the prepared statement, and she is very disarming, to say the least. And what I mean by that, she is very soft-spoken, and one might quickly think they could overpower her, talk over her. She fumbled a little bit with her microphone at the very beginning, getting it up just right so that they could hear her. But make no mistake, whether you agree with her or not, she has the courage of her convictions. She knows what she believes, and she's going to stand by that, and she will not be intimidated by a group largely populated, a room largely populated by men. There are women in the room. Maxine Waters has spoke this morning and asked questions. But Janet is holding her own. And we'll get into the whole what do Janet Yellen and Prince have in common later in the show. You have my word. So, happy Tuesday wherever you are and whatever you're up to. I hope it's a great day for you. I'm so glad that you're with us during this 2-hour period of your day, 12 noon to 2 p.m. Eastern, Monday through Friday, every trading day. If you're here for the first time, a very special welcome. I want you to make sure that you're able to see the charts. Okay? If you don't see my chart, that means you have one more step to go in the login process. Easily resolved. Go to the home page at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered and good to go all the way through the end of the month. Come March 1st, we'll all register again. It's a 30-second process, once a month, but it does allow you to see all of the charts that we talk about during the course of each day's radio program, and it allows you to participate in the program itself. You can make comments, you can ask questions, whatever you want to do. If there's a particular market that we don't normally cover or that you would like us to take a look at, type it into the chat box. We'll be happy to take a look. Now, if the question that you have or the comment you want to make is more than your fingers are able to type, that's okay. You can call toll-free 866-928-3310, and the lovely Ms. Leslie will be happy to patch you through live to this radio program. So we start out each day, for those of you who happen to be new, with our good word for the day. and we are going to start with that today. Now, our theme, if we had a theme for this week, would be the Holy Spirit. That's what we talked about yesterday, and we'll talk about it today. Let's go to John. And when the Holy Spirit comes, he will convict the world concerning sin and righteousness and judgment. That's John 16:8. Notice it says he will convict, not condemn. Big difference, okay? Now, no matter how often we try, during times of temptation, it can be difficult to show our love for God. For in temptation, we realize love for God is contrary to all of our emotions. When we give in to temptation, the result is guilt. And if we keep repeating that sin over and over and over, eventually we develop a heart of stone. And that's not a pretty sight. But there is good news for the Christian in the face of temptation. The Holy Spirit convicts us to push back, to say no, and to do what is pleasing to God. Sometimes he brings to mind a verse on the example of Jesus. He is the source of what is truly supernatural, and that is resistance to temptation. So often, Christians try to live the good life on their own, in their own strength, and the bad news is it's doomed to failure. When we face temptation, we're up against spiritual powers of darkness and evil that have been around since the foundations of the earth and before. And I got news for you, friend. They are stronger and smarter and far more devious than you or I could ever be. If you're a believer, if you're a Christ follower, don't be an arrogant fool and try to make it on your own. Claim the power of the Holy Spirit, and you'll find victory over temptation. And that's our good word for the day. I had an interesting evening last night. Sometimes, we have great plans for what we're going to do and how it's going to work out and what it'll look like, and then nothing could be further from the truth, right? And then other times, things just spontaneously happen, and it turns out to be something quite special. I had just such a moment last night with my wife after the kids were off to bed. I had received a text message from someone that many of you probably know who he is, Matt Crouch, son of Paul Crouch, right? Those Crouches on the TV ministry folk. And I know that the audience is very much divided. As you take any room full of people, believers, non-believers, doesn't matter. The ranks are divided as to whatever. And so I'm not even going to get into that. But he had sent me a text message a couple days ago with a preview of a video of a memorial service that was held for his dad in Jerusalem. That's now been shown and made public, and it is quite stirring. But last night when I clicked over, or my wife clicked over to that channel to see if it was airing for the general public, I think we might have missed it. Perhaps it was on a little earlier, but there were some special guests on the show. One was Erwin McManus, who is the pastor of Mosaic, a very contemporary church in the Los Angeles area. And if you're from LA or the LA area, you probably heard of Mosaic. If you listen to the CFRN radio station, you've heard Erwin preach on many an occasion. One of his one of my favorite series that he does. It's called The Biggest Loser. He came out with that sermon series a number of years ago when the TV show of the same name was becoming very popular for, I don't know, a different reason. But they also had on the show, Matt and his wife last night, they had as a special guest Roma Downey and her husband, Mark. Roma, you may not recognize the name, but she was the angel in the old TV show Touched by an Angel. Now, that show had to have been popular 20 years ago, right? She hasn't aged a day. She might actually be an angel. She looked young and vibrant and happy, and she was full of passion, and she and her husband were both very excited, and I'm going to tell you why. You may not have heard about this. I had not heard about it until last night. She and her husband have been working on a project. Now, her husband, he's a TV producer. He produced the TV show or series Survivor. You might have heard of that one. It was pretty popular there for a while. I think it's still on. Also, he did a couple of other big shows. The names of the other ones escape me at the moment. And some of you are probably going, whoa, hey, wait a minute. I've seen Survivor, and that's not exactly a Christian show. And Mark said, well, you know what? It's not Christian themed, but it is a family show in that, you know, your whole family can watch it and you won't be embarrassed. He said, even, and because a lot of it's shot, of course, on, on an island, who's going to get thrown off the island? So there's water and beaches and bathing suits. Well, he said that whenever that little part of somebody's anatomy around on the backside there shows, right, they digitally blur that out. Because Matt was trying to give him a hard time about, and Mark was standing up for himself and going, no, we blur that stuff out. And lo and behold, for the first time ever on the TBN stage, they used the words plumber's crack. I kid you not. I was watching it as it unfolded, and yes, they did. And then Matt just couldn't let it go. He had to say it, 3 or 4 times. Irwin's sitting over on the other couch there just looking, I don't know, maybe a little uncomfortable, but, not really, because Irwin is a very relevant and timely pastor. I encourage you, if you've not listened to any of his messages, go to mosaic.org, and they've got them podcast there for you. You can listen to your heart's content. But back to what I think is really big news. Roma and her husband have been working very hard these last few months, I think even a couple years on this project. There's a movie coming to theaters February the 28th, and it's called The Son of God. Here's what's truly amazing. This film is scheduled to open in 3,000 theaters. Simultaneously across America, 3,000 screens. Now, if you're like me, you probably don't have any point of reference, and so you don't really know, is that a big deal or not? Well, let me answer that. The big blockbuster movie Iron Man, it opened its first weekend on how many? Just about 3,000 screens. And so by the world's standard, that's a big deal. By Hollywood standards, that's a big deal. And when our friend John Garfield, who is a host of the show, one of our shows here on CFRN, every other Friday, Releasing Kings, and he's also the author of the book Releasing Kings and developer of the website releasingkings.com. One of the 7 mountains that he talks about is the mountain of entertainment. How we need believers in Hollywood, right? See, not every person is called to the pulpit, right? Those of us who feel that we have a call on our life, and by the way, whether you feel it or not, we were all created with a purpose and a destiny. But see, we need believers not just in the pulpit. I mean, trust me, the last thing in the world God needs is another broke preacher, okay? But what he could use are some talented people in Hollywood, like Roma and her husband Mark. What God could use is some believers on Capitol Hill in all areas of business, industry, and entertainment, in science, right? In education. There's a call, there's a need. I want you to think about that. And I want you to be in the studio, or not in the studio, but I want you to be in a theater, if at all possible, on February the 28th in your town, wherever that movie opens, whichever screen it plays on. I'm going to ask you to just, and I don't ask you to do much, and you know me, I'm the last guy in the world to ever go out and pay full price for a movie ticket when I know I can just be patient, wait a couple weeks, couple months, and it'll be on Netflix or in the Red Box or, you know, somewhere that a cheap guy like me can go see it. But I'm going to dig deep. I'm going to go ahead. I'm just going to pay the full price because I know that along with opening on 3,000 screens, which is big news, there's going to be a head count and there's going to be a dollar count, right? And I want I don't know what it costs to go to a movie these days, prime time, when they first come out, probably $10. I don't know, maybe 15. Maybe there's a matinee showing or something I can go to so that my money will get counted in that weekend box office total. And friend, how powerful would it be to see this thing, this movie, this incredible movie be one of the top grossers for that weekend? I think that would be huge. So I'm calling you to join me, to join Matt, to join Mark and Roma and everyone that will be turning out that weekend to see this movie. Now, why is this particular movie so important? I mean, didn't they just do The Passion of the Christ, the Mel Gibson movie? I mean, don't we all kind of know the story? Well, yes and no. You see, Passion of the Christ, great movie. Forget Mel's personal issues. Okay, God can use anybody, and Mel's proof of that. All right. That focused on 3 days in the life of Jesus. 3 days. This movie, Son of God, follows Jesus from the cradle to the grave. Oh, on the way from the cradle to the grave, he stops off at the cross. But then after the grave, the story's not quite finished because there's the resurrection and then the ascension. Now, I want you to think about this. If you are a man or woman of a certain age, as I am, you grew up with a movie, or at some point in your childhood or early years saw a movie called The Greatest Story Ever Told. Very popular movie. Okay? Now, I want you to think about this. Since that movie, The Greatest Story Ever Told, there has not been a full-length, positive movie made about the entire life of Christ. Hasn't been done. There was that one scandalous thing that came out, gosh, I don't know, 20 years ago, the Temptation of the Christ. Hey, that's heresy. We know what that was. So we have the Passion of the Christ, we have the greatest story ever told, and between the two there's this incredible void. And so this generation, our children, where is their legacy? Where does that lie? We have an opportunity right now to build an important, or to write an important chapter in the history of this nation. And so I encourage you, February 28th, join me, my wife, my kids, and believers all across America who will turn out to see the movie Son of God. All right, let's go to the chart real quick. This is going to be a piece of cake because I only put out one tweet last night, and that was for the soybeans. I just ran out of time. It happens. And I put on the Google Plus page, I said, where did I say that? I said it right here. Right here. I said, consider being long soybeans above 13.30 or short below 13.18, whichever comes first. That's all I have time for tonight, but it should be good for your daily goal. And turns out 13.18 came right down through it. Target, if you're just looking for your 2 points a day, 2 pennies in beans is equal to 2 points in the S&P. The beans pay $50 per penny. S&P pays $50 per point. So 2 pennies here, 2 points over there, gets you to our daily goal of $100 per contract per day. This was a one and done. All right. And as for other markets, the S&P, now these are still last week's weekly trading zones. I'll start to leak out the zones to the general public later on in the week. If you're a partner, you got your zones in your email yesterday, Monday, before the markets opened, and that's how we do it each and every week. And usually by Wednesday, I'm starting, or sometimes even as early as late on Tuesday, I start to leak a couple of them out there to the general public. If you've never taken our free trial, you're welcome to do that. Michael will explain to you here in just a few minutes how to do that. And you can come on in and you can find out what those zones are straight away. It's a piece of cake. You sign up for the free trial, we'll even email you the zones today so that you don't have to wait, okay? Are they important? You be the judge of that. Of course, I'm going to say yes, because otherwise I wouldn't continue to do them week after week, and I wouldn't continue to point out how the market reacts and plays off of those zones, how it coils and consolidates and then makes its move to the next rung on the ladder, okay? Be it up or be it down. Each time price arrives at a weekly trading zone, as it did here, it has to make up its mind what it's going to do. What's next? After many hours of consolidation, it tried to take a drop, couldn't quite do it. Now, why is that? Can he draw a straight line today? Wow. Now, some of you were here last week during the radio show when I did this exact same thing a couple times. And you might have thought, well, that's just some weird anomaly, you know. Things like that are bound to happen every now and then. Really? Okay. I can save you some time if you want. You know, it's up to you, but these things don't just happen occasionally. They happen regularly. Now, in order for you to be able to spot it, see it, understand it, not after the fact, not on a historical chart, because, well, Mr. Magoo could do that, but to see it, to understand it, to anticipate it, and to trade it live in real time will require some work on your part. First, you'll learn how to read a chart. The next step will then be to learn how to trade. And that's what we offer the students of CFRN, the partners, if you will. We're not a trade calling service. See? It's not about that. Do we call out our trades before they happen and then talk our way through them as they're unfolding in the live trading room? Yes, absolutely. That's exactly what we do. But our goal is not for you to just come there, watch Michael, hear him call out trades, and then you jump in with your DOM and try to mimic that trade so you can, at the end of the day, call yourself a trader. Okay? Because that, what you are is a trader in training. See, when you do that, you're learning to become a trader. Okay? Call it what it is, right? It's when you're able to put on and take off that trade without any input from Michael or me or some talking head on TV or the Wall Street Journal. You just read that chart, you assess what's going on, you use our proprietary tool set, and you become the guru. You call the shot. You see it coming, and you take advantage of it in a good way, right? Okay. So what happened is we broke above last week's zone, 92.93, finally. We had a tweet yesterday which did not get triggered during yesterday's day session. 1786 on the downside, 95 on the upside. Now, it sounds like I didn't know which way the market was going. I didn't, and I'm okay with that because I knew what I wanted to do no matter which way it broke. It broke to the upside right here. Okay, a leg and a retrace and a leg and a little deeper retracement. Now, I didn't make this up. I did draw the line, okay? The tweet, as you can see on the Google Plus page, was indeed 1795. Price rallies up, puts in a swing high overnight at 1804 and a half. It then retraces, and what does it do? Puts in a swing low at exactly 1795. Now, please understand that this is an area, okay? I don't want you to think I'm trying to take some credit for calling this pullback to the tick, because I'm not. It's not what I'm trying to do or say at all. I'm simply pointing out that important prices and important areas are almost always tested. And so all I'm doing here is pointing out that once again we saw an important price and an important area tested to the tick. Okay? And based on Ms. Yellen's comments so far today, the markets seem to be liking the talk, because we are now up substantially on the day, trading 1809.70 on the futures. Gold is also up $15.60. Now it appears the president is getting ready to speak, so you might want to lock in those profits, whatever you got, because I don't know what he's going to. Presidents Obama and Holland hold joint news conference. I don't know what this is about and what they're going to discuss, but I will perhaps try to listen in on that for just a moment as Michael comes in to give us a recap of everything that happened today in our live trading room. Michael, are you ready?
I am.
I might have low volume, or it may be my headset's turned down.
Nope, no, sorry, it was me. It was
Oh, okay.
me. My microphone was on my head.
Okay. All right, I can hear you perfectly now.
Right.
And I don't know, just out of curiosity, did we get the points?
Yeah, of course we did. Of course we did.
He said, of course we did. Okay, well, that's great. We're not bragging. We're just it's just a statement of fact, right?
It is.
Not a fantasy, not a reality, not, some clever idea, but something that we actually do almost every day in the live trading room in front of real people just like you, using the same indicators, the same methodology, and the same time frame for every single market, right? So
That's right.
based on that, Do we expect that we can go in tomorrow and duplicate our efforts? Absolutely, because we don't change our swing every time we step up to bat. It's the same swing over and over. Well, you tell them, buddy.
I will.
Tell them all about it.
I'll show them. I'll show them.
Fair enough. And I can almost see your charts.
Almost. They're almost there. There you go.
Okay. I can see your spreadsheet.
Great. All right. Well,
Okay, and I'll hit mute on my end, and it's all yours. And I'll try to be very attentive so I don't leave you hanging when you're done.
Okay.
All right.
Thanks. All right, here we go. All right, good morning, everyone. Good morning, good afternoon, everyone. Today is Tuesday, the 11th day of February, 2014. 11th day of February, 2014. The results this morning, we were plus 3 ticks on soybeans, minus 10 ticks on the Russell, plus 7 ticks on natural gas, minus 4 ticks on crude, and plus 24 ticks on gold. This morning, it took us a minute in one trade to get to our goal of $100 per contract. And then we kept trading, clearly, and placed another 18 trades after that one. We had a total of 19 trades today. On the month of February so far, we're up $2,027.50 in the live trading room. And if you apply an $8 round turn commission to that, you would be up a net of $1,091.50. If you apply a $5 commission to it, you would be up a net of $1,044. I'm sorry, $1,442.50. Big difference. $1,442.50. All right, that is the difference. All right, that's where we stand on the month. $2,027.50 per contract so far for the month of February. Now, if you have not taken a free trial with us, go to www.cfrn.net and sign up for the free trial. The free trial is, hold on a second. Hang on. I'm trying to bring it over here so you can see it. If you go to CFRN.net, the homepage at CFRN.net, and we'll be going there shortly. In the upper right-hand side of the homepage, it'll be right over here. You'll see. To register for the free trial, we just need your name and your email address. Okay? And click register for a free trial. Once you click register, check your inbox to confirm the request. You'll be getting an email once you click register for a free trial. You'll be getting an email. The email is a confirmation email. Okay, it's sort of the anti-spam thing. So you click on that, and when you click on that, we'll know that you had taken a free trial, and we'll send you off all kinds of information. You'll be able to come in here for 5 luxurious business days. You'll be able to download our charting platform, download our indicators, and you'll be sent another email with a video in it that tells you exactly what the trade setups are that we do in the live trading room. Okay, it's all that information is yours when you take the free trial. All you have to do is click it. All right, now let's get into the actual trades. I'm going to start with crude oil. It's way over here. We took a few trades here on crude today, and crude, we were down on crude to begin with. I mean, we ended down on crude, but we were way down on crude at one point. It was moving around. It was moving around pretty well here in the pre-market. You can see crude was moving down pretty nicely here. Had some good opportunities. Once the markets opened up, I missed this first trade right here on crude, and I missed the second trade right here on crude, and the third trade right here on crude. I missed all 3 of those, and then I took this one way up here. That one stopped me out, minus 8 ticks. I took this one, stopped me out, minus 8 ticks. Yeah, I was down 16 ticks at that point. And then I took this one right here, and it looks like I got 8 ticks back on this. I took this one over here, and I got 4 ticks back on that one. All right, so I was at minus 4 ticks right there. And that was pretty much where we ended. That was all the trades. I missed 3 trades on crude in the morning session, and I took 4 trades on crude, and I ended minus minus 4 ticks. If I'd gotten those 3 winning trades, all 3 of them were winning trades, if I'd gotten them, then clearly I would have been much better off. But that was crude oil for me this morning. All right. Let me slide that off, and we'll do the Russell. Now on the Russell, I didn't take all that many trades on the Russell, but you can see the Russell really started moving here recently. I missed a bunch of trades in here. I missed one there, one there, one there, one there, one there. I missed a whole bunch of trades, but this one was after the live trading room ended. These 2 were when the live trading room was still going. All right. Let's see. Yeah, it looks like I missed a whole bunch of things on the Russell this morning. It started out kind of choppy in here. There was a nice up close above the trend line right there. I missed that one. There was a follow-up right here that went for 4 ticks. It would have been a break even if I had gotten that. This one, had I gotten it, probably would have been a break even, maybe a couple of ticks profit. It didn't put in the lower swing, got very choppy, and this was all when Yellen was speaking and being confirmed and all that. And I meant she's still speaking, I think. And then we had this big move down. I took a short right here. Note to self: after you get a big move down like this, anticipate some larger retracement. Anyway, I took the short on the down close below the trend line, stopped me out pretty much to the tick, and then it dropped like I expected it to do. I took the follow-up trade right here. This one, we were minus 8 ticks on this one. I got 6 ticks back on this one. I got slipped on when it started pulling back up. I had locked in 8 ticks, I thought, and it slipped me when it took me out of the trade. That put me at minus 2. I missed this trade right here, which would have been a nice profitable trade. Then I took this one, which stopped me out, and I was, yeah, and it stopped me out and put me at minus 10 on the morning. Okay, you can see I missed these other 2 trades right here. And was there a trade in here? No, there was no divergence on that. So possibly right here you could have taken a down closed right here for this move down. But you can see right here it bottomed out. Bottomed out right there. It needed to close below that box. And it didn't. And it started a nice move up right here. Very nice move up. I missed this trade and this trade. And I did actually take one of these trades in here, but not in the live trading room, so it doesn't count. Alright, that was it for the Russell. No, my Russell chart just messed up. There it goes. Okay, so I'm going to slide the Russell off to the side, and I'm going to bring gold in. And gold. I don't know what happened to my paint bars on the gold, but they don't seem to be present anymore. Let me just see something here. PB flow. Yeah, it's there. Anyway. In the gold. Hang on, I'm trying to scroll back here. Uh-oh. Okay. Here. This was this morning. Nope, that wasn't this morning. That was yesterday morning. Sorry. Please be patient. There we go. In the gold this morning. This was our first trade in the gold right here. Was it gold? Yeah. That was our first trade in the gold right there. And we took 10 ticks profit on that. The next trade right here was a break even. We took 1 tick profit on this one. This was a close above the trend line. This one right here was a close above the trend line. We took break even on. This was a close above the trend line. We took 1 tick profit on. We're at plus 11 there. On this one right here, another close above the trend line. I took 9 ticks profit on that. Put us at plus 20. Took 2 ticks profit on this one. We're at plus 22. I took 10 ticks profit on this. That put us at plus 32. And then missed this one, missed this one. I took this one, and this one stopped me out. I was at this point here. I lost 8 ticks on this. We're at plus 24 after this trade right here, and that's how we ended the morning session. All right, there was a trade here that I missed, and I'm sure there were more trades in here that I missed. Right here, right at the close of the morning session, we missed this beautiful trade right here. You didn't need the trend line, you just needed the sub close right here. And that trade really ran. Let's see. Yeah, and I was still looking at the charts after the morning session, but this one right here ran down and worked out well. Okay. Let's see. I gotta do something here. All right, and that was it. On the gold right now, there's a long trade that was triggered right in here. Looking left, it doesn't have a lot of potential. It's got to get up above 91.2. Okay. No, I think I just implemented something, Pete, and I need to go back it out. I put the new weekly trading zone in last night, and it seems to have had a negative effect, so I got to go back that out. Let's see, and the soybeans. Today in soybeans, we only took one trade in the soybeans today. Right here. Okay, we missed this nice trade right in here. We missed this one. We missed this one. There was another one in here that we missed too. No, we didn't have any divergence. We took this trade right here. All right, it was sort of a momentum trade. It went 5 or 6 ticks from where I entered. I only took 3 ticks profit on it though. Okay. Let's see. Other than that, well, the soybeans turned down. They dropped through the BBC right here and started to give a shorting opportunity. So there was a down close right here. Okay. And that was pretty much it on the beans. They're setting up a trade right now, but keep in mind the beans close at 2:15. So you don't want to get stuck in the beans overnight. If there's any market you don't want to get stuck in overnight, it's the grains. Okay. I'm a true day trader. I do not hold anything overnight. If you're holding it overnight, you made a mistake, in my opinion. So the high of this bar right now is whatever it is. What market is it? So it's 1330. So the low of that bar is going to be 1329. A down closer at 1329 would be a short trade and should get down here. Okay. You can see this is the head and shoulder pattern. This is the head. This is one shoulder. This is the other shoulder. It's already broken the neckline. So I would look for that down close on the soybeans if you wanted to. It would be, and I'll point to it right here. 1329. All right. Let's see, the ES. We only pointed out one trade on the ES today, and it was way down here, 97.75. And you can see that trade ran up pretty nicely there. It's not to say that that was the only trade there was on the ES, but that's the only one we pointed out. Let's slide the soybeans over and see what they do. All right, natural gas is next. On natural gas, we had a few trades on natural gas too. So let me blow that up, and we can take a look at it. Here, let's go right back to the beginning. Here it is. All right, so we missed this first trade right in here, which for me, this should be down here like that. Okay, it would have been from right here. It would have been a break-even trade for me. I took the second trade on natural gas. I got 1 tick profit on that. I took a third trade over here. I got 5 ticks profit, and I took a fourth trade over here, and I got 1 tick profit on that. Nope, I got break-even on that. I got 1 tick profit on this, I think. One of these I got 1 tick profit on. But those were the trades that I took on natural gas. It got really choppy in here. Natural gas didn't have the same volatility that it's been having for the last couple weeks today. We have crude inventories coming out tomorrow, and natural gas inventories are due out on Thursday. But you can see right here, in the morning session, it didn't have the volatility. Since the morning session, it's had some pretty good volatility, you can see, bouncing around. The thing about natural gas, and you guys, anybody that watches natural gas probably has noticed this, is you get a big move and then consolidate, a big move and then consolidate. That's the way that it acts. All right, big move and then consolidate, big move and consolidate, big move and consolidate. This was kind of a choppy move, but this is all consolidation. You see what I mean? That is natural gas. That's how it behaves. Most markets have their own sort of behavior, and Our indicators, they're all on the same time frame. They're all the same on every single market, and they work well within all the different behaviors of these different markets. The soybeans didn't close down, it closed up, so no trade on the beans. All right. That is it, guys. That is it. If anybody has any questions about anything, you can email us at support@cfrn.net, or if you want to talk to me, you can call me at 1-949-423-6464. That's 949-423-6464. All right, I'm going to wrap it up, and we can head out to Vegas. There you go, Dwayne.
All righty, sir. And here I am.
Excellent.
As I said I would. Yeah.
Excellent.
Okay. Now to recap. You took how many trades today to get to the daily goal?
One.
One.
One today, one yesterday, too.
We don't make this up, guys. It's just we report to you what happens, and it's in front of a room full of live people, so there's no hanky-panky or funny business. It's and I know that sometimes it all. I said this yesterday, and I'm just stating the obvious, that sometimes it seems, I don't know, a little too good to be true, but you can't when you're dealing with after the fact, like if you're watching a video of some guy doing live trading. I'm not accusing anybody of anything. I'm just saying that it is possible for there to be some hanky-panky with, delayed feeds and changing dates and blah, 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 blah. But when it's an actual live market unfolding in real time, you can't, there's no way to, pull the wool over everybody in the whole world's eyes at one time. They haven't made a hat big enough for that. Is that how you pull the wool over people's eyes? Is it a hat, or how do they do
I don't
that?
know. I think that's the reference, but I'm not sure.
Oh, okay. All right. Or I don't know if it's a blindfold or how that works. But anyway, so, and the reason we point it out is not to show you how awesome we are, but just to, like I said at the beginning of the show today, to turn it from the good idea, the nice theory, oh, wouldn't it be cool, into actual reality. You maybe have often wondered, gosh, could somebody actually do that? And by the grace of God, we are able to do it with our methodology and with the proprietary tool set. Not just every day, but on most days, we're able to do it inside of a 2-hour window. Now, that doesn't mean that you can do it, period. Okay, just because we do it most days inside of a 2-hour window, that doesn't mean that you're going to be able to do it. Our results are not your results. Past performance is no indication of future results. Trading is risky. It's not suitable for all people. You can lose all of your money and then some. And those aren't just words. What I said to you is real. It's palpable. You better believe it, okay, because it's true. If you're not careful, if you don't utilize some kind of risk management, you are not long for this business. Now, is it possible to learn how to be a trader and not use as aggressive a style of risk management as we do? I'm sure there is. But if you are attempting to learn without employing any risk management, or those types of like insane risk managements where, let's face it, on the S&P, if you're gonna use a 20-point stop, do you really even have a stop? Maybe you do, and it's hard. It's 20 points away. And if your account size is substantial enough to support that, and it's working for you, I don't ever want to get in the way of somebody and their proven success. You know what I'm saying? If what you're doing, if it totally goes against everything we believe and teach, but it's working for you, then let me get out of your way. I do not want to interfere with success. If, however, your method, whatever it might be, is not serving you well, and you've given it sufficient time, there's been a large enough sample size and all of that, well then perhaps it is time to step back and take a look at what it is you're doing, how you're doing it, and if in fact you do need to make some kind of change. If in the final analysis, at the end of the day, you decide, yeah, I think I do have to do something different, well then our doors are open to you. And if you've been down our road before, okay, and you need a second chance, the way to go about it is head on, straightforward, send an email, hey, I took your trial, however long ago it was, and we like to, once every 6 months should be sufficient. But if you have some extenuating circumstance, there was sickness or something happened, either way, just email us and say, hey, look, I did take the free trial, and this is what happened, and here's where I'm at, and I would like, to have another go, and I'll take a closer look. I'll set up. I'll pay attention. I'll actually, download the platform and install the indicators and put on and take off trades because I really want to become a trader. And if you say that's what I need to do to show that I'm serious, yeah, I'm willing to do that. Okay. Because trading is not a spectator sport. I mean, it can be, right? I mean, if you have a lot of money and you just want to pass it off to a fund manager, money guy who will take care of all that trading for you, well then yes, it absolutely can become a spectator sport. And there's nothing wrong with that. I'm speaking right now to those individuals who don't have that sizable pool of money yet, okay, and you actually want to have an active hand in the management and or trading of your own funds. You're the person that I'm speaking to. So, with that said, Michael, I know you've already told them how to take the free trial and all that good stuff. Partners, be aware of where the next weekly trading zone is overhead. Be prepared for that. We've had a very nice run, a very nice day. You certainly don't want to allow that to turn negative on you. I'm not saying we're headed for some huge sell-off or anything. I'm not insinuating anything other than I'm encouraging you to be careful. If you have profits, lock them in. You worked hard for it. Hang on to it. All right? Okay. All righty. So with that, we're headed out to Vegas, guys. Just let me pause for a very brief station identification, and then we'll be right back with David Williams from PageTrader.com. Don't touch your radio dial now. We're coming right back.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
Good morning, Dwayne.
David, good morning, sir. Welcome to the show.
Hey, thank you very much, and good morning, Michael, and good morning, everyone.
Good afternoon, David.
Good afternoon.
Good afternoon. It is an afternoon, right?
Well, where I am, it's just 10 in the morning. Where you are, it's cold, snowy, and miserable.
Yes, all that.
All that.
And 1 o'clock.
And you selected that place to live. I just want to remind you.
Yeah, this morning.
I didn't select it on my own.
Well, you grew up kind of in that neck of the woods, though, didn't you?
I did. I did.
Yeah. This morning in the morning devotional, which, by the way, guys, we have a conference call every morning before the markets open, just a little bit time of fellowship. And one of our partners who lives in New Jersey. And I don't know why I never thought of New Jersey as being a really cold place. I just guess I never really thought about it. But I think he said it was 6 degrees last night, and it's supposed to be 3 degrees tonight, and it's going to snow, I think, all day. So, Carrie, stay warm by all means. Yeah, I mean, isn't that just... Ooh, I got my window open. I'm not trying to rub it in anybody. It's a beautiful day, and I want to enjoy it, because soon it will be 115, and then I won't be able to have my window open. So.
Yeah. 115 is on its way.
David, I don't know if you were able to catch any of Janet Yellen's testimony or Q&A today. Did you? She testified.
No,
Janet,
I did not watch her. I did not. Okay. I didn't watch her today. Did you get a chance to see that?
Yeah, I did. It was during the live trading room, and Michael was kind of handling the live trading room, and I would, put that on mute and listen in a little bit and kind of report back as how it was going. And then finally, I had to take an actual break, walk away from the screens, and by the time I came back, the thing that we were waiting for to happen had happened in my short absence. It, kind of popped up. I don't know in particular what she said that the markets seem to have liked so much. I mean, not only the stock market, but gold, both have reacted positively to those comments. I think it was the first time I've actually heard her speak. She held herself very well. She was a little nervous, I think, at the beginning, but you couldn't really tell it. She fumbled a bit with the microphone, but I think that was just like a mechanical thing. She wasn't used to how close that thing was supposed to be in front of her. She is very soft-spoken, which leads me to the headline for the article I'll write later today. And the headline is, what do Janet Yellen and Prince have in common? And of course, the answer, David?
Purple rain? I don't know.
This is what it sounds like when doves cry.
Oh. Well, so you were close.
That's a line from that song.
Yeah,
you were so close, man. You get a ring just for that. I mean, that was good.
Just for coming in close.
She is soft-spoken, and I think she uses that to her advantage very well. It's kind of disarming because maybe men think that they can bully her or talk over her, and that's not the case. In a very soft-spoken way, she held her ground. She was firm. And while she and I may not have the exact same outlook on proper economic policy, she does have my respect as a woman, as a spokesperson, as an important public figure. Second, probably in importance in this country, the way it's structured, to the president. It's a big job.
Well, it is, and I'm impressed that she's got the job. I hope she does a good job. I think there are a number of, factors that the markets have expressed that have the bond market, even though it's going down today, with the stock market going up, and we'll get to the markets, but we have not from today, but from a couple days back, a new outlook or a new forecast for bonds, which nicely coincides with the Janet Yellen, tendency in this office. So we'll talk about that a little bit later.
Okay. All right.
So
Barclays is going to whack 12,000 jobs and pay bigger bonuses. I had to read that twice to make sure I got it right. And I won't go into the whole story that I did at the beginning, Dave, but last night I had the opportunity on TV to see Roma Downey, the actress who played, remember the TV show some years ago, Touched by an Angel? Yeah, great show. And that had to have been 20 years ago, I think, when it was popular and on TV. And I saw her last night, She may be. I don't know, because she didn't look as if she had aged a day. I mean,
Really?
just amazing. Yeah,
Huh.
and she and her husband have been working very hard to produce this movie. And the website, guys, it's sonofgodmovie.com. And what makes it, I think, important and relevant, as I explained earlier just briefly, Mel Gibson did a 3-day depiction of Jesus' life and Passion of the Christ, but that was 3 days. What about the rest of the story, as that one fellow used to say on the radio? So this movie does go from cradle to grave and back again, and there hasn't been a movie, a legitimate movie, that has done that since the movie that we grew up with and around, The Greatest Story Ever Told. So February 28th is the premiere, and the thing that is so impressive, it's going to open on 3,000 screens that weekend. And to put that in perspective, because personally I don't have a benchmark for, you know, what's popular with Hollywood and what's a big number, Iron Man, one of the last blockbusters to come out, if you will, its opening weekend, I believe it also opened on 3,000 screens. So, but that's her right there on the screen. Now, of course, she's playing Mary, Jesus' mother, and so she's wearing some makeup to intentionally make.
We don't see her on your screen, though, Dwayne.
Oh,
right
my goodness. Oh,
Yeah,
thank you,
I
David.
have the screens.
Thank you, David, for sharing that.
I was going to say, I've been looking at charts so long, she almost looks like a bar chart to me. Gosh, I've got to get away from these. I need to see a specialist.
Oh, that's funny.
But Dave, that is
All
a
right.
bar chart. Oh, God, thank God.
I am in the process of trying to recapture my screens here. Come on. Come to Daddy.
While you're doing
Okay,
that,
there we
there's
go.
quite a bit
Now-
of...
Okay.
oh,
Go ahead. No. Go ahead.
I was
Say
just
what
going to
you-
say there's a... Well, there's a lot of controversy
Right here.
regarding
That's
the young life of Jesus.
Mm-hmm.
There's very little recorded about it. There's quite a bit of supposed indications that he spent some time in India
Yep.
before he was, the age that he revealed himself, and so on. So it's going to be interesting to see how the movie handles the mixed...
The lost years. Yeah.
The
that will
lost
be.
years.
Mm-hmm.
Because
And they
there's
did not-
whole books written on that, as you know.
And last night they did not give that part away. They showed some clips from the movie, and the actor who they picked to play the role of Jesus, at least the adult Jesus, he's got a look, and so I mean that's going to have some star quality and appeal there. I hate to say a movie about God that ladies are going to turn out because the actor is, handsome, but he is a handsome man, and so that will play a part. But the little clips that they showed, he has some real talent and skill as an actor. I just, the little short clips that I saw, I felt that he was very believable, if you will, in that role. And it's done in a manner that I think today's youth and all people of all ages will find to be very relevant. So that's, as I told the audience, that's where I'll be on February 28th. And I'm a cheap guy. I don't pay full price to go see a movie, but for this one, I'm going to dig deep, and I'm going to go. So
Okay.
there you are. In other news, what do we got? Let's see. Citi and J.P. Morgan and Goldman use 401k plan that snared AOL. What does that mean? Citigroup, J.P. Morgan, and Goldman Sachs make lump sum payouts to their employees' 401k plans, the banks confirmed to MarketWatch on Monday, using a similar strategy to the one AOL attempted to impose before it got in hot water last week. I didn't know they were in hot water. AOL CEO Tim Armstrong backed down from the planned 401k changes, which would have altered the company's contributions to employees' 401k plans so that employees received matching funds once a year instead of with each pay period. And maybe, David, I'm sure you know the answer. Why does that matter to the employee? Why is that different?
I don't know about the specifics about those plans, but the nature of 401k plans is quite complex, and there's a number of them. Everybody should have some kind of retirement. This is just my opinion. Everybody should have some kind of retirement plan. If you're young, you have such an incredible opportunity to start a retirement plan rather than waiting till you're older and having to rush. The law even allows you, it actually allows for people who are older, who may not have put it together correctly at a younger age, to be able to donate larger amounts than younger people can to help catch up, because they're starting later in life for their retirement plans. And there's many different kinds. So I don't have the specific answer, but I do know this, that just in response to that question, without really answering it, I just want to stress to people that you would be amazed at the difference it makes if you are putting anything away in a retirement plan over some period of years, as opposed to not doing it at all. And the 401k is just one of many different kinds of plans there are out there, defined benefit plans and so on, that allow varying amounts of money depending on your income and depending on all these different things. But it would be really wise for you to have some kind of 401k, and if you're a lazy thinker, like many people are, they'll say, well, I can just put that money aside, or excuse me, save a little bit here, save a little bit there, and it's all the same. And it isn't all the same. One of the big differences is that in a 401k or in some of these defined benefit plans, you're not taxed on that money. Mm-hmm. So it gets to accumulate. So, do you know what the amount is? Oh, okay. Okay, I'm sorry. Anyway, what happens is it gets to accumulate tax-free. Now, it's not tax-free forever. It's tax-deferred. Right. But that deferment allows you to accumulate money at a non-taxable rate. So whatever you put in that 401k, it builds up without, or whatever the plan is. Each one has a different reference to tax laws and stuff. So anyway, it's a big deal.
It appears that the thing that's causing the controversy here is that AOL and all the other companies I mentioned, Citigroup, JP Morgan, Goldman Sachs, what they want to do is, instead of contributing to the employee's 401k on a weekly basis or every 2 weeks, depending upon how that company pays their employees, that what they want to do is they want to make a once a year lump sum payment.
Yeah, and they get to hold the money longer.
And they get to hold the money longer, and the employee is not being able to accrue whatever interest they might be able to get throughout the year. Now, I would have to say that this is acceptable if you want to make that lump sum payment a year in advance, but obviously that's not what they want to do. The end game is they actually want to postpone having to pay anything for 12 months. Now, the AOL firestorm, it says here, might have passed as just a small flare if CEO Armstrong hadn't stuck his foot in his mouth by saying that the company needed to save money because of Obamacare. He said that. And workers' distressed babies, meaning babies whose births cost the company $1 million each. In late 2012, when IBM said it would switch to once-a-year payments, it found itself in the firing line too. The 2 U.S. senators from Vermont pitched a fit. Then again, the policy isn't entrenched in tech companies like it is in banks, and senators rarely fire off missives at the possibility that bankers might make less pay. And Michael, I think you had a comment there?
Oh, my comment was that they're just holding on to the money longer. So it kind of defeats the purpose. It sets the whole retirement program a year back for everyone. I mean, suppose you have a great run in the market and you don't have, you're not gaining any interest-free, or tax-free interest on the money that you should have. Granted, it's not a huge amount, but it is something, and because the amount that you can contribute, whatever it is, for different income levels, I guess. It might be $12,000 or $15,000, but there's interest that you're going to earn on that, and then that interest over 20 years is going to have interest earned on it. So it's interest lost. It's a full year's worth of interest lost on that money, and that's money that the company is just holding on to.
Now it does. It goes on. Yeah, it does go on to say, on the surface, changing to a lump sum format might not seem like a big deal. A company paying out matching funds to employees at the end of the year is still paying out matching funds to the employees, and getting something is better than getting nothing. In other words, it's better than if it were just cut completely. If you know cost changes are coming, this is perhaps the least painful for people who stay with the organization. Still, lump sum policies can have repercussions. Take, for instance, a company that waits until the end of the year to pay matching funds into the employees' 401ks. That means employees, here we go, Michael, this is what you were saying, that means employees lose out on the chance to make interest on those matching funds throughout the year, while the company gives itself the privilege. However, in a bad year, though, employees are protected from market losses on those funds. So it does, swing both ways. Okay, well, and yesterday, an American icon, an American great passed away. We didn't speak about it yesterday. Shirley Temple.
Oh, I didn't hear that.
Who does not remember that dimple-faced little darling? When I was a kid, I forget, 8, 9, 10, there was a Shirley Temple movie on every Saturday afternoon at like 2 o'clock, and I think they were all in black and white. And, I mean, she was so young and so talented.
Yeah,
and
she really
got
was.
her lines right and could dance and could sing, and this person had to grow up to be some huge TV or movie star, and in fact, she grew up to be a U.S. ambassador to, I don't remember where, do you?
I don't, no.
I don't. See what our friend Google says. Shirley Temple. Shirley Temple. Famed former child actress. Let's see. Who rose to fame as arguably the most popular child star in Hollywood history past Monday night. She was 85. She enjoyed a long career as a diplomat, died of natural causes, surrounded by family and caregivers. She began acting at the age of 3, became a massive box office draw before turning 10, commanding a then unheard of salary of $50,000 per movie. Now, this is in 1932. Her first film of notice in 32, when she played in War Babies, part of the Baby Burlesques series of short films. For about 18 years, she sang, tap danced, and acted her way into the hearts of millions. Her corkscrew curls were popular with little girls from the 30s through the 70s. Her star shone brightest as a toddler. 20th Century Fox cranked out a series of feature films, including Little Miss Marker, Curly Top, and The Littlest Rebel, 1935. At the box office, she beat out the great adult stars of her day, such as Clark Gable and Bing Crosby. Her popularity spawned a large array of merchandising items. But as she got older, the pace of movies slowed, and by 1939, her popularity was fading. She and 20th Century Fox terminated her contract early in 1940, just before she reached her teenage years. She retired from filmmaking at 22, married Charles Black, but she didn't fade from the public eye. She embarked on a new career as a foreign diplomat. She served as the U.S. delegation to the UN from 69 to 74, ambassador to Ghana from from 74 to 76, an ambassador to Czechoslovakia from 89 to 92. So, my. I bet you, well, I don't want to say I bet you, but perhaps on Netflix, for those who want to take a stroll down memory lane, or if not Netflix, then I'm sure somewhere on the internet you can go and watch some of those old movies. So, other than that, David, anything going on in your neck of the woods you want to talk about or chat about, or before we go to the markets?
No, but that strikes me. I just was going to say that I didn't know that, and that sort of strikes me. That's kind of a bellwether for me that she passed away for some reason. I don't know why, but I feel a reaction from her. I remember being young and seeing her really young or something. I don't know. She must have been older than me because she, obviously she died at 85, I think. But
can you see my screen?
Pretty remarkable. Yes, I can.
So here are just a few of the images that we might. Okay, as an older woman, young adult, that's obviously some type of that's a painting.
Picture.
Yeah, picture. Young woman, little girl. Man, she could sing, she could dance. Goodness, she just the entire package. Shirley Temple.
Yeah.
Who in the world did that? Oh, we could have done without that one. Yeah. So.
Yeah, no, that's some wonderful memories for those old enough to remember, like me.
And her choice to not, pursue that as an adult. Apparently maybe she had her parents or manager was smart and prudent.
Yeah.
And so she had money, and so it was never maybe a money issue for her. And no, I'm sure there'll be books written, and probably already have been written as to why she chose not to pursue that career path. And
she'd been doing that since day one. She was born into that. She started at an extremely young age.
Yes.
And for many people, after 25 years of doing that, maybe she felt that was enough.
Yeah.
Yeah. That's a long time to be doing something. And she may have had other natural inclinations and talents. Apparently she did. Mm-hmm. Everybody's gifted in some way. Some people just have a lot of gifts,
They do. Let's see. We've got a couple of comments here. What do we got? Pete says, matching a 401k plan with a company is a benefit, not a law, that companies have to obey. Entitlement generation must realize this and be grateful that they work for a company that does that for them.
Yeah.
Companies can pull that away from them at any time and tell employees to
get their own.
Get your own.
Yep.
And then let's see, from Rick, R.I.P. Shirley Temple.
Yep.
My late mother loved her movies because she was the same age, and some of the fond memories I have of my mom is her taking such delight watching Shirley's movies on late night TV.
I think I have some of those same memories, and I remember even when I was young being struck by how animated and how many different expressions Shirley Temple would make on her face as she was dancing, and these very several levels deep of emotion being expressed on her face, funny and serious and fake funny and all these different things. She was really quite adroit emotionally at a very young age. She had a lot of different things that she could play out.
And elaborate dance routines, from tap dance to soft shoe. Oh, and I did want to address someone early on in the, where did that go? Oh, yeah, Rod had mentioned early in the show, David, before you came on, I was talking about a fellow who's a pastor in Los Angeles of a church called Mosaic, very popular current type of church, if you will. And Rod says, my daughter, Audrey, is on the worship team at Mosaic. Rod, that is amazing. Small world. If you have any samples of her music or anything, I'm guessing that perhaps outside of the worship team, maybe she has some of her own work. If you'd like to share that link with us, I'd be more than happy to share it with the audience. So just an offer. Don't want to put you on the spot, but okay. Well, I don't see any other headlines. Oh, one headline that I didn't bring up the other day. CVS has said they're no longer going to sell cigarettes.
Oh, yeah, I think I heard that.
And Walgreens said, well, we are. They were quick to jump and go, we are.
You can buy them here.
Now you know where to go get your smokes. I've been meaning to bring this up. We'll go straight to the markets after this, guys, because this is market related and goes along with something we've been talking about for some time. We said there would be competitors to the Bitcoin. All right. In 41 days, 5 hours, 32 minutes, and 54 seconds, Aurora coin will drop. And that's hip talk for, I don't know, whatever. Aurora coin is a cryptocurrency for Iceland. It is based on Litecoin and is 50% pre-mined. The pre-mined coins will be distributed to the entire population of Iceland commencing on midnight, 25th of March, 2014. And so, guys, I'll put the link in the box for you. This is not a recommendation to buy or invest in this. I'm simply sharing it with you because we've all seen the meteoric rise of Bitcoin. When I think Bitcoin first came on the scene, it was like 75 cents for one Bitcoin, and we saw the price go up over 1,000, and I think it's settled now around $750. I'm not insinuating that that's going to happen to Aurora coin, just making you aware of it. That's all. The link for anyone who wants to learn more and pursue it. And maybe you want to go out and really wrap your brain around this whole mining business, because I know it kind of, David and I both have a little bit of a difficulty with that. I mean, I've read the explanation, how you have to solve a mathematical equation, and by solving it as your reward, you get the coin. Anybody that wants to come on the show and speak intelligently about it and explain it, we'd love to have you come on and do just that. In fact, maybe I'll reach out to these folks and give them an opportunity to come on and talk about it, and we can ask them the hard questions.
I think that, I'm not 100% sure, but I think, and we do need to find out 100% sure, but mining may be another phrase for verifying, for absolutely knowing that the payment or that the Bitcoin is real and so on, because there is a calculation that's associated with it and so on. And some of the hotels in town, there's been a couple out here now that are accepting Bitcoin, not on the gambling tables, but in the hotel itself where they can transfer them there and take it. So it is, even the fact that it's in a hotel is a huge thing for us in Las Vegas, the fact that any hotel is accepting it.
Right. And guys, this executable file and the zip file, I can in no way vouch for the fact that these are, without some kind of something or other in them. So if you're going to download this, if you're going to open these files on your computer, I would suggest that you isolate them, quarantine them in a folder or something, or partition on your drive, and then run your best, antivirus software against it. And it might, because of the nature of it, it might appear as a virus and not really be one. So just proceed, with caution on a couple of levels. As number one, is it something you should be involved with financially or investment-wise, and is it safe to put on your computer? So, Okay, a reminder coming up on Thursday, 1 p.m. Eastern, right here on CFRN. We'll have Wayne Jett. He is the author of The Fruits of Graft, and I believe that's a play on a very popular book called The Grapes of Wrath.
Of Wrath. Right.
Yes. So, took a couple days for that to dawn on me, actually, but I got it now. So
That's okay. I just found out the Beatles broke up, so I know what it feels like. All right, you want to get to the markets?
yes, sir.
All right. If you want, we'll start with the S&P 500.
Okay.
So Janet Yellen today, gets sworn in, or whatever kind of proclamation, whatever happens in that meeting, and she apparently had good news to reveal to people that everyone liked. If you want to associate the market to what happened today. The technicals preceded her. We all know that because the technicals were calling for a weekly bottom the week of January 27th plus 1 week, and the bottom occurred on the plus 1 week. It spiked down real low, getting the crash people excited. Then they took it all back, closed the week very well. And, of course, we've been talking on the program with you about a multi-week advance, and that advance is underway and ties in now fundamentally with the news and so on. The news and the technicals run together. One supports the other, and it doesn't always work that the news supports the technicals. It can be thought of the other ways. The technicals support the news. In other words, the reality of the news is often supported by or the upcoming news is supported by the technicals that are already in the market and so on. So today's advance...
Chicken or the egg.
Right. In this particular case, it can be the chicken can come before the egg and the egg can come before the chicken, if you want to think of it in those complex terms. But anyway...
we've been reduced to barnyard animals here for our analogies.
Yeah,
so.
exactly. Let's use barnyard animal analogies for the stock market. That'll keep the audience guessing. Anyway, so really this is, obviously we have a great powerful advance underway. The market has broken above some important levels. The highest level that we have in our panel today is 1815. We're right at that level. We're up here testing that level now. What doing?
Oh, nothing. Partners know why I'm laughing. It's just that and it'll be on the screen tomorrow. So we see the market differently, but yet we come together so often.
Yeah, this is a particularly, I think it's a pretty obvious level, and it's an easy target, or even a juicy, if you want to use that term, target for the traders and so on. But the fact is that they've run to it, and they've completed a decent portion of our forecast for where the market would go, which we've given to subscribers off of this weekly bottom. Again, this weekly bottom is exactly the same as the last 6 weekly bottoms or tops that we have traded off of. We normally have been buying individual stocks or selling put premiums on stocks on these weekly bottoms. And this advance, I think, will solve any of the bears' concerns, at least short term, for the market needing to go dramatically lower. But having said that, it's going to be interesting to see where they're able to take this with regard to our forecast, not for the 15, but there's some higher prices. And just how they handle themselves over the next several days. We have 3 trading days left. There's quite a bit that can happen, and I'm very curious to see what they show us here, because if there is, what was the fellow's name that came on with the crash article?
That's John Nyardi.
Yeah.
John Nyardi. Right. Mm-hmm.
Now, John is not forecasting a crash, but he's questioning the possibility of a
that would probably be
crash.
a good way to put it. And in fact, let's see, the article I did get for those of you who missed the interview last week, guys, I did get it uploaded finally last night, and the headline, Prophet of Doom or Smartest Guy in the Room. Sometimes it just makes myself laugh. But anyway.
Yeah, and he's not really forecasting. He's not really
No,
saying
he's
that
not.
he's expecting it. But he's asking
not.
people to question themselves, hey, is it time to start thinking about
here's his article
possibility?
right here.
Yeah, you can read it. There's many ways to paraphrase, but I'm only bringing it up because I'm not including him in the group that is predicting and have been predicting crashes. Many of them, it seems like a lot. We've talked about this. A lot of Elliottian, especially some named Elliottians that are out there. They're focused a lot on forecasting the big crash, and you could do a lot better trading the longer trend and buying pullbacks and utilizing stops than you are always trying to forecast the crash. You can do a whole lot better doing that, believe me. That's what we do. And there is going to be a time when there's a possibility where it really is obvious that something really big could happen, and we'll talk about it, at least from our perspective. But even then, we're looking to buy pullbacks until it's really obvious that the trend is over. And it's been a very good trend. The Obama years, the 5.5 years and plus that he's been in office, because of a number of reasons, but while he's been in office, the stock market has tripled, 300%, 666 up to 18, hundreds.
Yeah. Now some will say, well, was he just in the right place at the right time? That's a whole big argument.
if you're gonna take it from him when it's right, if you're gonna take it from him when it's bad, I'm gonna give it to him when it's good. Whether it's under his, I've been fair about that. I will give him his due in the office. The stock market has rallied profoundly, and I'm not gonna say but it's because of this or but because of that. It has, and I'll give him his due. I've got plenty of things I can take off the ledger as well, that we don't have to go into right now. But the stock market has rallied, and interest rates have been very low, and I think Janet Yellen intends on keeping them that way. And we do have a new forecast for the bond market, a longer-term forecast for the remainder of this whole year. We're forecasting the entire bond market from this point forward to the end of the year in our latest forecast. And I'm quite positive that we're going to see it play out similar to the way that we are laying it out. And otherwise, we wouldn't lay it out if we weren't that sure. But that it's an interesting thing that just a couple of days prior to her getting named, it became quite obvious what the remainder of the year would look like. And we have that whole forecast we're giving out on the Williams Edge product. And we'll talk more about it on the program here as well over some time here. I just want to let the subscribers have it first, and then we'll give it out over the next several weeks and so on. So if you're interested in it. So basically, that's it in a nutshell for us on the S&P, Dwayne. We're watching the culmination of the weekly bottom and the normal action off that weekly bottom. This is a great, if I may say so, but yet normal reflected wave turning point. This is what it's all about. Is for us is finding these high probability turning points and putting our best foot forward to trying to trade those while managing risk. And we do have a statement that we put out, as you know. We're almost 3 years into that statement now. It started in April of 2011, and we're in our next webinar we'll give our latest results and where we are. And that's a real money, real trades, real account, verified by Birch Lichter statement that we show everything: the wins, the losses, the whole shooting match. And in the end, whatever the dollar figure is, it maybe is not as important as the fact that the markets have been really a one-way street for quite a bit of that time. So I'm not going to discount our results too much, but I do want to say that we were on the right side of the market.
Yeah, I mean, some would say, well, all you had to do was buy the thing and just hold on, but
That's
it's not that easy.
It's not that easy. It's not that easy. What you have to do is you have to decide that the future trend is going to continue, or the previous trend is going to continue into the future. And in our particular case, you have to place some sizable bets in the market in the form of options that is going to be the case. And we relied on, the big thing for us is that we relied on reflected wave heavily to assure us that at the very least, if the trend wasn't going to continue up for that whole period of time, that at least we were going to get a very reasonable bounce off of that weekly bottom or whatever it was we were buying, just like in this case, and that would give us a lead in the position and the ability to manage it through, even if it ends up not being a good call or something like that, but later the market needed to go lower. So, I'm very happy to give a lot of the props to the market itself because the market has been virtually year after year pretty much straight up except for 1 year since the beginning of the presidency.
Along the way, I mean, we were just talking about all the articles that are out now about the crash, is it coming? And John brought it up last week, and you had mentioned it too about there's a lot of those charts floating around that kind of say that this is a mirror image of.
Oh, I don't want to see another one. I'm so tired. I've been seeing those since the 90s.
Yeah. Somebody in the live trading room this morning had asked what my thoughts were on that, and I just said, what you just said, we've been seeing them for a long time, and eventually will it, probably, come true, or, perhaps bear out in some way to some degree. I don't know. I mean, we had a crash that took the S&P 500 from 1,500 and change down to 666, and now here we sit at 1,800. What everyone must understand is that the S&P 500 is a best-of-breed index. The weak are culled from the herd, the strong are brought in. It's not based solely on market capitalization. There's a whole long laundry list of things the committee considers when booting somebody or bringing somebody in. And there's actually an article out on our blog that gives you that whole list of things they look at when making their decision. And so, despite whatever crashes we may or may not have, over time, this thing is going to go higher and higher and higher. That's just my belief. So
yeah, well, and that's fair enough. The market has really, if you take a look at a yearly, if you're charting, if you have a yearly chart,
I don't.
Yeah, if you don't, that's fine. It's just that, it's had a straight up run, and we're grateful for that. The strategy that we used along the way was just simply selling put premium for the most part, and in some cases owning the stocks. There was, if you look at a yearly chart, although you don't have it, January was a year that had a lot of the candlestick people wondering if we had a top in January because, not in January, but of 2011, because it was basically a year-sized doji. It was a year that panned out as a doji, and people were concerned that that possibly meant a top and retest of the big lows at 666 and so on. So that wasn't the case. The market continued on. We're quite certain that 2014 is going to mark a very important top, as we've talked about for the last year and a half here or whatever, that 2014 is going to mark a very important top in the S&P, and that we're going to have a multi-year decline from this top. There's no question in my mind.
But the best I can do, David, here is a S&P, this is futures now, not the cash, and this is a monthly chart, not yearly, and it looks like my data will reach back on this particular platform to September of 2011. And, I mean, there you go. It's just been month after month. I mean, we had a down month here. I mean, this month took back, I don't know, 1, 2, 3 months of gains, then higher, and we gave back a little. So leg, retrace, big leg, shallow retrace, leg, retrace. Hey, look at that little month there. When was that? That was September 2013. That was a quiet month. And then here we are right now, February.
Yeah.
2013.
So we do have a correction coming, and it is going to be commensurate with this type of scale and this type of advance and so on. But in the end, and we're going to come up with our own best forecast for where we think it's going and so on, but the fact is there is a correction due, but we're early in the year of 2014. The cash market did make a new high in 2014 and a new closing high in 2014. The futures did not. And that's why this rally that we're in right now in the S&P is really valuable to our strategy and to everyone else's who has been trading long, depending on how they handle this and a number of factors. Just the way that the market treats this advance will be very important. So I'm excited to see what we come up with as we move on through February into March and so on. So there you are. That's my longer-term S&P outlook.
Okay, you want to go to gold?
Sure. Let's see. Let me switch over.
This is a daily gold. We are trading in the merry old month of J, GGCJ4. That is the chart you're on, correct?
That is the chart that we're on,
okay.
And I actually have a chart that I'd like to show regarding gold. Speaking of gold,
I'll pass it to you now.
If you would, I appreciate it. We actually, and I'll show you another chart as well that is regarding the S&P.
There you go.
Thank you. This is the last 6 reflected wave tops and bottoms on the S&P. And again, we did not short. All we did with tops is take advantage of the fact that we should be thinning out a position. We were not selling short. We're just buying pullbacks like we did here in October, in December, and then again we got, as I mentioned on the radio, we were down to our smallest position when we made this top, the weekly December 30th top, and then we started putting positions back on last week and this week as the market was fixing itself. Because we were in the 1 week late period, which in the reflected wave is a very powerful point in time. So, the reaction that we're expecting is there. The other day in gold, I had mentioned to everyone that we had a very powerful indication that was given out right here, where you see this 1248, and we gave this to our Williams Edge subscribers and so on, which was that if the market could not touch 1248 in the February 5th and February 6th time period, that would indicate a very powerful advance. And we gave the number where gold's going to. It has not reached that number yet, but it's already up $4,000 per contract from this level right here, from them not having reached the 1248. And the reason this was such an important indication is because this indication came while the market was inside a weekly top. Now, a weekly top is a very, that's a pretty important top. That means the market's going to go sideways to lower for several weeks. So how could the market be giving this kind of signal of strength right here? Well, that's what we talked about on the radio the other day, that on your program, that it was giving a sign of strength last week. And lo and behold, here we are. That's the proof right there that the market does indeed give away. In many cases, it's telling you in advance that there's a force already at work, even though you can't see the force in the normal manner, the manner of saying, hey, here's the force, here's these 3 big bars up, that's the force at work. No, the force was at work over here, but over here the market was being pressed down upon. There was a secondary force pressing on it down. But that secondary force, the primary force actually that was pressing it down, couldn't get it down to 1248. So as soon as that cycle releases and lets itself go, then the market shoots right up because it has no opposing force then. So the fact that the market couldn't get to 1248 is good evidence, and was good evidence, and I said on the radio last week that is evidence that there's a lot of buoyancy in the market and a weekly breakout is likely. And that's exactly what we've now seen. So we think gold is going higher. We've given that out to subscribers. That's a fairly recent thing, so I'm going to save that. But we did talk about it on the program, and hopefully somebody got a chance to maybe take advantage of this, or at least not be short into this particular setup. One other one that we haven't. So for gold, if we're going to talk about gold, we think gold is, we've had this forecast for a couple of months that gold would be heading higher into February of this year, and the prices were given out, but we had a little bit of consternation about the weekly top that was put in a week or two ago, and how long that would take to get us a buy signal and so on. But the February 5th and 6th deal really pretty much sealed the deal for us that gold was going to go higher and complete the target in February. So we still have higher prices to go, so we're bullish on gold. Even if we have a multi-day sideways to pull back or whatever, we think higher prices are coming. Also, yesterday in our Williams Edge with regard to soybeans, we had said that you could short soybeans for a quick decline to $13.15 into today. And the soybeans did go down today, made a low of $13.12, and then they've regained a lot of that ground back today, which I find interesting that they've been able to do that. We'll have to take a look and see for ourselves what this all ultimately plays out for, but we're flat in that market right now. So for the time being, those are the two markets I basically wanted to show. We'll continue to, I'll switch this back to you, Dwayne, go over a few of these other markets as well. You tell me if you get this here. Handing these back to you.
Okay, and I will grab them. And here we go.
Okay, there you are. Let's run through a few of the others real quick, and maybe this will be of some value. So we've talked about gold. We think higher is coming. This is a very powerful indication what they've done here. Do not short this market. You know, if you're going to do anything with it, I would say be long, even if we have a couple-day pullback here until we see the higher prices, you know, at least for us, that we think is our due. Then we have the U.S. Treasury bond market. With the here's an interesting thing. People, a lot of times, they look at the U.S. Treasury bonds and they look at the stock market, and they assume that the bonds will go down when the stock market goes up, and indeed, in many cases, that is the case. But today's bond market went down very slightly, not a big deal, commensurate with a really big deal in the stock market. So the bond market is showing some resiliency here, bullishness, a short term so far today, in the face of a very powerful advance in the S&P. So that would imply that the bond market, as long as we do firm up here, we think the bond market's going to advance, and you're probably going to be seeing, you know, 133.17 and higher, something like that. This is a little bit rough, but they're going to move from here. As long as we stay roughly above, if we close today well, you know, above maybe 132.20-ish or something, just something in this range here, if we're above that, we're probably going to see a multi-day advance, which will then be commensurate with the stock market pulling back a little bit. So keep that in mind. I think that's probably tradable. We do have a full year forecast for the bond market. It covers the entire year. So I want you, those of you that are interested, to come take a look at that and check that out. I think it's going to be pretty tradable, considering that it fills up a lot of time. And you can give us a call, 888-231-4702, if you want to take a look at that and maybe put that to work in some way in your trading. The euro today, you know, my voting for the trickiest market of 2014 is for the euro, and I'd like to have them go up and give their acceptance speech at some point, you know, and talk about how great it was to do all the tricky moves. The euro today advanced very nicely and took some of it back. So it's very interesting where they are. We do expect higher prices in the euro, and we're going to continue to talk about that and trade that as we're able to. Let's see, a couple other markets. We've given out that number, but we're going to you can get all the big numbers for where we think the euro is going, and it's nowhere near where it is right now. But we expect that number to be reached in February, the month that we're in. I would also like to say that at this point, with as tricky as this market has been, and let me just describe to you what tricky looks like. If any of you have a weekly chart of the euro, you could, if you wanted to, go back to, as an example, the week of December 9th, which was an up-closing week. The following week was a down-closing week. The following week was an up-closing week. The following week was a down-closing week. The following week was an up-closing week. The following week was a down-closing week. The following week was an up-closing week. The following week was a down-closing week. The following week was an up-closing week.
How rare do you think that is, David, that it would alternate that much. I mean,
it's pretty
I mean,
rare in my memory, Dwayne. I don't
yeah.
remember seeing that
I mean,
kind of behavior for a long time. I don't know
if you
that
were
I
going to
remember
give that
seeing
a label, would you call that trendless behavior? I mean,
scary, I think, would be
okay.
a good
All right,
label.
fair enough. We'll go with that.
Yeah. No, what it is it's the market is, for whatever internal reasons, is just finding weakness and closing on weakness, finding strength and closing on strength back and forth 7, 8, 9 times in a row. And we're now, right now, in the first, this is a week that we might close higher after closing higher. See, this could be that week. Well, we'll see. The week is young yet. But
well, I do have a daily chart, and we actually have, we've strung together, let's see. See, today's Tuesday, so Monday, Friday, Thursday. If we go back to last Wednesday, we had an up close. Now, this is Globex, so this may be different than someone's intraday chart. So an up close and an up close, right on up through Friday. Yesterday, oh no, this is today. I'm sorry. Yesterday, Monday, was an up close. Today, on the daily so far, well, we kind of know what that looks like. It's maybe, because I mean, we're well off the highs of the day. What would you, now you are expecting, you did say higher prices. Okay,
yes.
So is there some number, again, I've got up a daily chart, is there some number here that if we closed below today that would have you concerned at all?
Well, it doesn't mean that the higher prices have to come immediately.
Okay.
Today, but I think we're going to close today below the number we gave our people is that they're going to have trouble getting above 136.75. They did. They tested it today, but they're not able to get above it, and they will close below it today. And so let's say we have a reaction on the downside. How they handle that reaction will help us, help the detective story, because what we want to do is try to be long for another move. And again, I just want to remind people that this, in our opinion, has been the trickiest market of all of them. I mean, this is bigger than and trickier than something like natural gas and so on. We've had a number of decent trades in this market just even recently, but it has been very tricky and very unusual behavior that we just don't see very often. So because of that, I would suggest that you use extra caution. And as always, if you're not going to trade with a stop, then just don't trade. Wait till you're smart enough to trade with a stop before you start trading again. Let's real quick go over to the crude market. You know, we've been bullish on crude. A few days back, we had forecast a $2,000 per contract move in crude from $98.25 up to $100.25. I think crude has more in it than just that. They did reach that, and I think we're going to see higher prices again in crude. But we're flat in the market right now. And, you know, we have our friend who's been on the radio program, Levon. I don't know what his position in crude is right now. I haven't spoken to him in a while, but I have suggested through Bert and to him directly to not sell, not to be short, you know, to let this market have some room on the upside. You know, he doesn't need David Williams. He doesn't need Dwayne. He doesn't need anybody. The guy can do it all on his own. But interestingly enough, a lot of the guys that are successful are interested in other people that they, you know, care for their work.
Right.
They are looking for input. It's not like they're sitting there saying, hey, it's my way or the highway or whatever. They do look for other people's input. Levon looks to Bert, by the way,
Sure.
for input. I mean, there's no question about it that he values what Bert might have as an opinion about something or an opinion to not do something, and so on. So traders get carried away. You get flush, you know, if you have nice gains or something, or you get really damaged and you're not willing to trade again, and that first trade could lead to a series of winning trades. And a lot of times having that some wise counsel, you know, there, like a Bert Schlichter perhaps, is not a bad idea, because you can get lost in your own little house of mirrors, and before you know it, you're that guy in the Twilight Zone where everybody looks like you, and that's not a pretty world.
Well, you know, and man is wired to be a tribal animal. there is the, occasional lone wolf, mountain man kind of guy that comes along that just, wants to be left alone. But by and large...
Even the rifleman on TV, even the rifleman had a wife. He was a pretty lonely man.
He lost her, right? It was just him and his son.
Oh, maybe that's right. Maybe he lost his... Well, he still wanted a wife.
Well, he had one, and I guess something happened. I don't know if it was Native Americans or what happened to her or bad guys or I don't know. But, yeah, I think that's how that storyline went. The rifleman.
Yeah, remember that show? It started with him, Chuck Connors. It started with him with a gun against his hip, and he'd be pulling the trigger and walking forward. And it was a big, long shotgun, and I just vaguely remember that. But that was, I'm sure somebody in the audience remembers that show.
I think it was a rifle, wasn't it?
Yeah, it was a rifle.
Oh, okay, because you said shotgun.
Oh, shotgun. I meant rifle. Thank you.
And I was just going to say, for those who've ever, shot a shotgun, that shooting one-handed from the hip is no small feat if you could do that. But yeah, it was probably a Winchester. I can't call the make and model. I'm not that much of a real man. So, but anyway.
No, exactly. And you have to look like a real man to be a real man too. You can't
you can't have long flowing hair like a Native American.
You can't have long flowing hair, and you can't look like me. It's a skinny Jewish Gumby. Okay, that is not going to pass for a real man.
Oh, you know who we could be if you and I were going to be two characters in an Old West TV show. What were those two? There was two guys. I'm not talking about Butch Cassidy and the Sundance Kid. I'm talking about a TV show. Alias Smith and Jones.
Yeah.
Now, I forget, they were like on the run from the law for some crime they didn't really commit, and they were trying to get a governor's pardon or something. I mean, yeah. That was a good show. I remember that.
I don't remember the show very well, but we both come from the same era, obviously. And we both know what a real man looks like. And it ain't us. Thank you.
Yeah, right.
Okay, real quick on crude, I want to mention that for those of you who may want to, if you have indications on the short side, my suggestion would be that if today or tomorrow closes below $100.48, then it's likely that we would have a decline in crude, March crude. So short-term decline that's tradable.
Okay, now short-term decline. Say again, short-term decline.
Short-term decline that's tradable. Here's the thing. There's a little cluster group of important dates, if you want to think of them this way, that are come together. It's the February 11th plus or minus a day. Well, today is February 11th, and in crude that day is actually the 12th. So if today, and today already did test $148 almost to the tick, and if it were to test that or get close to that tomorrow and start to fail, that's actually a good indication for a decline in
overnight,
crude short term.
It did hit 149 overnight.
Yeah, I see that here, and that's why thanks. I was saying that it already did it today. It's possible it's already got the touch in and it's done, but the data February 11th is big in a number of markets for us. They're not only several reflected waves, but also just as a date of importance in other methodologies. So by putting all this together, crude, although we are bullish on it, we don't have an outright forecast for higher prices, so I am willing to take a short position, and we may take one in Williams Edge based upon this $100.48 level. Whether we trade right at it or make the market not have to go to that number quite or whatever, we may want to do that because there is some indication here that we could have a decline in crude. And then, just like we say so many times, if we're not clear on the whole thing, we trade the part we're clear on and we let the detective story go on, and then we find the part that we're clear on again. If you really want to learn how to trade, watch the murder shows on TV where they go back in time and they do all that detective work and they find the little bits and pieces, and before you know it, something happened 25 years ago that was a cold case. They're ding-dong, they're at somebody's door, and the guy comes out, yeah, it's been on my mind for a long time, I killed this guy.
That one show where they did the flashbacks and aged the people, that was a really great show. I think it was called Cold Case, and that's not on anymore. And I enjoyed it because they did the flashback scenes they did were really nice, and they would always have some music playing from that time frame that they were flashing back to. It was really. Now, from the audience, it turns out that our show, Elias Smith and Jones, we actually were Butch and Sundance incognito. That was why it was Elias Smith and Jones.
I see. Yeah, you see.
And
we're a
then
little slow.
Jim
Only
says,
took 50 years.
Jim says that the Chuck Connors rifle was an 1892 Winchester side gun. Is what it was called.
Side gun. Okay. Well, that is great that there's people. See, I feel warm and fuzzy when I'm around people that watched The Riflemen, because those people have to be near my age, unless they're watching it on YouTube.
Somebody else says no, Winchester 30-06. All right, I don't know.
Well, we don't want to get into a gunfight over it.
That's pretty good.
Yeah.
Okay, Jim had a question for you. David, where do you set your stop on a trade like the gold? I guess earlier you mentioned something about a trade on the gold.
Well, the thing about the gold is, and let me tell you on both the crude oil and the gold, when we have a number that we think is important on a specific period of time, I am interested in either trading that number or trading lower if we're shorting it. I don't mind. They don't have to go right to the number. We'll try to get in. But I do want to place my stop at a place where my best guess is that they would not be able to go there, at least for a short period of time. And that may look to the visual eye, and it might sound like a larger than necessary stop, but it is a stop. I mean, in this particular case, let me give you an example. So $100.48, we might start our stop at 190 cents as an example for this type of trade, multi-day decline. So you got 90 minus, 48, let's just say.
Now, this
so
is
it's a
trading straight out futures, not an option or anything, right?
Yeah, this is just trading the straight futures.
Okay, gotcha.
And we're basically saying we're going to risk $400 per contract, potentially to be in a move that might take us to at or near back down into the 97.70 range. Let's just say that was the forecast. I don't have a whole forecast worked out for this, but let's say that's what it was. Well, fair enough. That's a very reasonable risk, and what we're doing is we're going to move that stop down relatively quickly. We're not trying to rush it to the break even, but we're going to move it down so that the market has room to breathe and not be able to stop us out. And then once the move really starts to break and all that stuff, then we will move it down and start to contain the market and do all the risk parameters. But having spoken about gold, to answer your question about gold, the gold had it's very easy for me to say to you now, well, we did have the indication for gold to go up, and it did go up, and it wasn't able to hit 1248. But as it is so in so many cases, the market is doing that indication inside of a larger counter indication. The larger counter indication was the weekly top. So you're left thinking, gosh, that's really unusual. Do I want to trade the really unusual? Well, the answer is yeah, if they run this, they're really going to run them, because this would be unusual.
I think the technical term for that is freaky deaky. I think
yeah, so that's good, and I think I've read that in some of the books, the freaky deaky thing. So you have to basically say to yourself, listen, if this is what it looks like and we trade it, we're going to be rewarded very nicely by having taken on the risk. So I'm just pointing out to you that there almost always is a but on every trade setup. Well, I sure would like to go along right here, but there is this, and this. Okay, so you just have to live with the but. It's going to be there in every case. If the but is a really big one, like this one was, it does tend to make you pause, especially if you're somewhat conservative in managing money, as I am. And if it makes you pause, you may miss the trade, because that pause may be just long enough for the market to get underway, and that's often what happens. In this particular case, it did happen. We didn't actually get in this trade. We called it beautifully, but we were not able to get in it. I really would have preferred a little bit, even a slight bit closer test of the 1248, which we would have been only too happy to buy. So the reward is bigger if it's going to be a real freaky deaky. If that's really what's going to happen, you're going to get rewarded bigger for being in that move. And this is one of those moves. And it is going to go further than this, and it ain't done. And you'll see that the market really does, it really is true. Risk and reward run together. it doesn't mean, I used to think that risk and reward ran together meant that if you just took a stupid risk, you might get a really big reward. That's really not what it means. What it means is that at your best efforts to put a trade together, if there is a risk that's present and you decide to go with the trade anyway and you're aware of that risk, it's quite often the case that because you are apparently taking more risk, that the reward is often much larger than usual. Where the risk appears larger, the reward is usually larger too. It doesn't have to do with just doing stupid things and saying, well, I'm going to take a really big risk and just put my whole, 401k in long this position, because if I risk more, I make more. No, that's not the way it really is talking about. It just means setups that have counter-trend risk that apparently is there, and you take the trade. If the trade's really going to run this is one way of saying it, it's really going to move a lot bigger because the risk of it not happening, even apparent risk, and that's all we can deal with. We don't know what the real risk is. That's the thing about risk, is that it's really not super quantifiable. That's why you have to learn about the markets, so you can semi-quantify what the heck you're looking at and say, this is either more risky or this is less risky. Knowledge, you can't beat out knowledge. Even having a statistical background and saying, it happened 15 times this way and 10 times this way, so that means it's going to happen this way. I'm sorry, that won't do you a whole lot of good. What will do you a whole lot of good is learning how to read the market and learning how to understand how the market sets people up and then goes the other way.
Man.
That's really, you got to read the chart.
Now, someone just pointed out,
go ahead.
I just want to say, Jim just pointed out the Australian dollar has popped up rather nicely. I think he said it was a $4,000 move, and I'm looking here at this chart, and if we look left, we can see the last time the market tried to rally, we got stopped right in this, the market got stopped right in this area from moving higher. Do you have anything going on right now with the Australian dollar?
I don't, but what I do have, and I'm sorry I don't, because I don't even have the chart up. I lost the chart, and I called Bird, and I had trouble with. But I do want to say that we are bullish on the Canadian dollar throughout February. So
okay, now this is Australian, but you're talking Canadian.
Yeah, I'm just switching it to the Canadian. Okay. And just want to let you know that we don't have a chart up. I have to get the proper symbol for it because there's a number of symbols in CQG that each one is a little different for one reason or another. So we are bullish on the Canadian dollar throughout February, and we could see substantially higher prices in February in the Canadian dollar as well.
One final question for you on the S&P. Paul wanted to know, can you ask David if 2014 will be considered a one-year late top for the S&P?
No, it will not. It will be considered a on-time year, depending on your platform. And if you are a reflected wave student, you can call me up and I'll give you some new and interesting update that will help you understand that. But it is the on-time year for the top. And but we have other reasons to believe as well that 14 will mark the top, aside from reflected wave, which is good. That means that there's other backdrop to that as well. And then, as we've talked about, we would be going lower into the election, and we would want to trade, essentially, the pullback. I mean, that's tradable. You want to trade the short. Forget crashes, but we do want to trade whatever it is that it needs to do on the downside into 16. That would be, that's a nice trade. And so once we have better evidence.
2016, is that what you're saying?
Yeah, until the president's, until the the election.
Gotcha. Right. Okay.
So because the election year is often very, there's a sizable amount of interest in the election year. Things kind of get polished up. At that point, you don't want to be in your short.
The calendar is like the bullish thing, right? Isn't it?
Yeah, all of that, and you don't want to fade that. And even if it did go down a whole bunch more, it's wise to do the thing that has that much force behind it. And usually, 9 times out of 10, I don't want to be a statistical guy, but the seasonality of the election year cycle is very powerful, and it's just something that you should, if you're shorting into that, when it starts to turn, it's probably a good idea to not be short anymore. And from having been short, maybe if you were shorting from the 2014 top and so on. So anyway, so there's a lot to this. So the big takeaway from all this is that by your years of mind-numbing staring at charts isn't for nothing. It does get recorded in your mind. Little bits and pieces and scraps get filed in all these different places, and you can get an education. You can learn from other people about how to look at charts. There's many ways to pick up an education, but in the end, you end up reading the market. That's what this is all about. You end up reading the market, and that reading gives you not a trade every minute, but what it does is it gives you moments where you can tell the probabilities are higher than normal for a specific thing to happen. That's what it's all about. Hey, there's a moment here, and that moment could be literally a moment if you're a real short-term trader, or like perhaps in our case, that moment might be 2 or 3 days, or maybe 2 or 3 weeks, whatever that time frame is. But there's a period of time where the odds highly favor a specific thing happening. And that's all we're looking for. We don't want to trade outside of those times. I wish we could, because I wish we could know it all. But I'm not able to know it all. And all I need to do is find those times, and all you need to do is find those times where the probabilities, through reading the market, clearly go in your favor for a specific thing to happen. Whether you're trading for 8 ticks or you're trading for 800 ticks, whatever it is, that specific thing is supposed to happen, or if the probabilities are in your favor. You can't go to statistics. You can't. It all comes down. It's Joni Mitchell's song. It all comes down to you. You have to learn to do this yourself. And anyway, even if it was somebody else's statistics and so on, do you want to bet on that? Don't you want to get this, under your own skin and read the market correctly and have the faith of your own convictions? And that's a very powerful part of trading, is to be convicted of this. And one of the best things to overcome non-convicted trading, if you want to think of it that way, is an enthusiasm for thinking of the market as a language that you want to learn. And one of the most basic things about this language is that the market knows you're looking. Just think of it this way. The market knows you're looking, and it tries to set you up, I know this sounds weird, to then go the other way. It tries to make it look like it's going to do one thing to as many people as possible, and then it goes and does the other thing. And that's one of the basic things. If somebody said to me and held a gun to my head, what is the market doing? I think that would be my first answer, and then my next question would be, is that gun loaded? Because if it isn't, I ain't talking anymore. But that's a big thing. The market sets you up. Take a look at what just happened in the S&P. We just had a spike all the way down to 1732, which got the bears extremely excited. Take a look at the day of February 3rd. How powerful of a straight line, flat out, closed down on the day. Everything was just death and destruction.
Here it is right here, guys, on an hourly chart. There it is.
Yeah. Now, that's the market saying, hey, we're really on our way. We're out of here. It's all over. And if you put up a daily chart, those people who might have believed that was the final nail in the coffin for people to say, yeah, this thing's going down forever. And now we're so far up above those levels, it's laughable. And that's what the market does. If you can think in those terms, it's not a bad idea to think of it in terms of personal terms, that it tries to make it look one way and then it goes the other. And so I use that in my own trading. I try to think in those terms, and then I also use the technicals to see if it is going to go the other way, what time is it going to do that, and how specific can I be, and how can I protect my capital while taking a trade. And before you know it, you get really skinny like me, and you look a little like Gumby. Over time, that'll happen.
Here's, let's see, what day was that? That was this day here. Now I just went from an hourly, guys, to a daily. And so February 3rd was not only an ugly day as far as being down, but let's see, this January 24th was pretty tough too, to the downside. And Pete had brought up, when I showed that monthly chart of the S&P, and we were looking at that little tiny month, what happened, he just reminded me that that was the month the government, quote-unquote, shut down.
Oh, okay. Well, there you are. No, Dwayne, I do have to run. It's about 4 minutes past. They're going to call me. But that was fun. We'll go over this again tomorrow. I really am better looking than Gumby. I just want to say on live radio that there is a little resemblance to Gumby, but it's better in person. Right. You'll see. Okay. You come to the seminars, I'll show you.
Well, they see your picture every day when this thing
it's not a good picture. I purposely took a bad picture so you'd think I'm even that nerdy. And, this guy must know his stuff. Look how nerdy he is. Look at that. Okay.
All right, man. Have a good afternoon.
I'll see you later. Thank you, guys.
Okay.
See ya.
Bye-bye. I'll be around for a minute, guys.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you.
Okay, if we have any final questions, let's take a run at them. Got one? Do you? Let me take a look at the, oh, I wanted to talk to you for a second here. Whoever brought that Australian dollar up, Jim. Was it Jim? Yeah, Jim, thanks for bringing that up. We haven't talked about it in a few days, and it bears looking at for a couple of reasons. Now, this is a daily chart, okay? March contract, Australian dollar. Now, this is not a Forex pair. This is a currency future, and there's a difference. If we were to put up, let's see, what is it? What does that trade against? It trades against the Canadian dollar, the Swiss franc, the Japanese yen. Here's against the U.S. dollar. Let's see, just for a moment, what that looks like. All right, current price looks like about 90.16, just on the Australian. Just straight out currency future, 90.16. If we were to go to a currency pair, what kind of price do we have? You know what? I got too much stuff going on. If somebody else out there wants to take a look at that and report back, that'd be great. If not, that's okay too. I'm not going to take all the stuff off of my, well, maybe I am. All right, there we go. Here's why it's important. Let's go up here. We can see where, well, we'll go over here. We can see where the buyers took control of the Aussie dollar back in September of, September of last year. Now remember, guys like Soros were calling shorting the Aussie dollar the biggest trade of the century or the decade. Maybe it was the decade. And this chart's not going to go back that far, but it really did, take a tumble. Started to recover some in September of last year, and on this chart, we can clearly see the day, the time, and the price where the buyers actually took back control after that historic decline. We made a run, we pulled back, right, to the BBC. Now, keep in mind, this is our traditional slingshot chart. This is what you see Michael trading in the live trading room. This is identical to the 4-tick range chart that he uses each and every day. If we were to apply those exact same principles to this daily chart and not a 4-tick range chart, see, daily, bullish cross, okay, buyers took control on September the 11th, 2013 at a price of $90.06. Follow on my crosshair, follow the horizontal axis to see price and the vertical axis to see the day, right? September 11th, 2013. Bullish cross. Price pulls away, price pulls back. Okay. On this day that we pull back and touch the BBC, what we want to do now is we want to follow the vertical crosshair down to the slingshot at the bottom, because what we need to do is make sure we have bullish divergence if there's to be a trade here. Okay, we do have bullish divergence, clear as day. The only thing is, on this day that we pull back and actually touch the BBC, on that day, the cycle has turned red. So, what does that mean? That means we've got to draw a trend line across the tops, and we then need a bullish close above the trend line. So that means we don't get this, and we don't get this right here. This candle gives us our bullish close above the trend line. And then the rule set, exact same rule set applied to a daily chart versus a 4-tick range chart. You buy the open of this candle, which is 93.08. Okay. So the entry would be 93.08. When we say that the markets are fractal in nature and that you can take the slingshot, even though we trade it on a 4-tick range, every trade, every market, over and over and over in the live trading room, you can put it on a 5-minute, a 3-minute, a 500-tick, a 10,000 contract. Doesn't matter, because the markets are fractal in nature. And what we do embraces the underlying rhythm of the market itself. And so, where do we go? From 93.08, we hit a swing high up at 96.61, which means I don't have my fib just perfect, do I? How about that? I'm going to make it read 96.61 if I can. Yeah, close enough for government work. All right. So, from 93.08 up to, we'll call it 96.60. That's a pretty nice run over this many days. I'm not going to take the time to count the days, but that's how far the move went. Then we had a reversal of fortune, okay, and the bears regained control of the market. Remember, they controlled the Aussie dollar for most of last year. Soros and all the other big guys, hedge fund guys, are all saying, sell it, sell it, sell it, trade of the decade. Okay, and they were right for most of the year. This was a pullback and then a continuation of the trend. We can tell you on this date in time, November the 6th, at a price of $93.49, sellers took control of the market. Bearish cross, price pulled away, price pulled back. Okay, so on this candle that touches the BBC, we need to follow the vertical crosshair down to see if we have bearish divergence. We do. The red line is below the green line. And because it's red and it hasn't changed color to blue like over here, okay, on this candle that pulled back, it's red, so we don't need a trend line. We don't need no stinking trend line, as they say. What we need is a down close, okay? All right. This could be your down close right here. Or this. Okay, you don't have a red candle here. What you have, this candle, let's see, it opened at 92.91 and this candle closed at 92.89. Let me make sure I got that right. Opened at 92.91, closed at, so that was indeed a bearish candle. Can't see. Let me blow it up for just a minute. Yep, now we can see that little red body. So this candle not only, okay, it not only gave us the pullback, it also gave us the down close. And so what would you do? You would sell the open of the next candle. Would you have had to deal with a very significant drawdown? You would. All the way up to the swing high here, which is 93.70. Okay? Now, we're talking about a daily chart. On a daily chart, you're not going to trade with an 8-tick stop. You can, and that's fine. In fact, I even encourage it, but what's going to happen is you're going to get stopped out quite a bit. On a big move like this, you could get stopped out a couple, 3 times before, and then you have to have the courage of your conviction to get back in the market. You take the 8-tick hit, okay, you're back in once things line up. Get stopped out, you know. In this case, perhaps you would have gotten stopped out once, and then once you took out the low of this candle, maybe that's your signal to get back in because you've still got your divergence. Everything is still all lined up. The market did nothing wrong. It simply pulled back to the BBC. And this down close here, once we broke the low of this day, you could have been short potentially if you're the kind of guy that trades a daily chart and has the ability to stay in the trade. Ooh, that's hard. It really is. Cash registers going ding, ding, ding. And can you hold it? Do you get stopped out here? How close are you trailing? Do you get stopped out on this pullback? Well, if you do, hey, you had a nice run. Maybe you follow it all the way down to here, and you're just trailing right behind that BBC, and you get nicked out down here. Okay, so you had a stop out up here, you got back in, and then you trailed, and then you ultimately got taken out, right? Okay. So now what do? Well, you got to wait and see what's going to happen next, which brings us to where we are today. Now, let me shrink this up a little bit, get it all back. All right, so we can see the entire thing. We've had a bearish cross, pull away, pull back, big move down. Price attempted to rally here, okay? Where did it get to? Well, at the time, see right now we have the benefit of this swing low, and we know that currently from this swing high to this swing low is a 38% retracement. But what about over here? What about this when we didn't have this low yet to compute? Okay, so let's take those fibs away for a moment, and let's go from this swing high to this swing low. Maybe if I scoot it over like this, it'll help you better visualize what I want to show you. Okay. Here's the swing high. Here's the swing low. What do we have? We have a 24% retracement, not a 38. Okay. Sometimes a 24 will hold, and sometimes it doesn't. That's the thing about fibs, okay? So for me, rather than playing some guessing game as to which fib is going to hold, I prefer to wait and see which one holds, all right? Now, since we do have the benefit of this new swing low, because the trend did continue down, okay, let's go back to our swing high, right there. Let's go down to this most recent swing low. And so now what we have, from the swing high to the swing low, we have a 38% retracement. We also have a double top at what was on the previous retracement a 24% retracement. Same number, better term, same area. Okay, and that's what fibs always are. They're an area. Yes, I know you can compute them to the tick, but if you'll accept that they're an area, it'll serve you better. So, bearish cross, price pulls away, price pulls back, away we go. Whee, all the way down. Pull back, lower low. So the downtrend is still in full effect because we got a lower low. Now on this retracement, 38%, we look left and we say, double top against what was the 24% retracement. So now what do? Well, we've had a bullish cross, which is an indication that prices may go higher, right? Over here, when we got a bullish cross, what happened? Prices went higher. Over here, we had a bearish cross. What happened? Prices went lower. Just because we have a bullish cross, is that a guarantee prices are going to go higher? Well, I could say that they already have. Does this mean they'll continue to go higher? I can't answer that, okay? Because our style of trading is not based upon knowing the unknown. Our methodology itself is based upon trading the actual, the factual, that which is right in front of us. Okay? We trade on that which is known, not the unknown. Okay. All right. And so what are we going to do? All right, so how are you going to play this? What you going to do? Well, I'm going to respect that this will be resistance. Double top and a 38% retracement. Okay? Until proven otherwise, I'm going to anticipate resistance. Let's make these fibs go away from, well, yeah, let's make them go away for a minute. Okay? All right. Let's do this. Let's go from the swing low to the most recent swing high. Okay? All right. So if we do get a retracement off of this double top area, which would be, again, kind of what I would expect, as price pulls back, what's that going to look like? Well, it could look something like that. Could be a candle, and that could be a candle, and by the time those couple days unfold, price could be touching the BBC and a 38% retracement. Now, I'm just painting a possible scenario for you. I'm not saying that will happen. I'm saying that is one possibility of what could happen. And so if price does that, if price does pull back to the 38% retracement from this swing low to this swing high, and we're bumping up against the BBC because it has continued on like this, well, now we're in a position, same kind of position that we were in right here and right here. Okay. On the day that it pulls back, if it pulls back and it touches the BBC, we'll want to look down here at the slingshot, see what kind of indication we have. If we have bullish divergence, then we'll consider, you know, if we're trading off daily charts, we'll consider a long trade. If it were an hourly, same thing. If it's a 4-tick range, same thing, right? Okay, so that's if it pulls back and continues higher. What if it doesn't pull back? What if it just busts through? Okay, let's take a look at that. Let's shrink this back up a little bit, get everything in one screen. Okay, get rid of our little make-believe candles that haven't happened yet. We're going to put that full fib back on. We're going to go from the swing high to the swing low. What if we just break through this area? Could that happen? Yeah. Hey, but didn't you say it was a double top? Yep. And didn't you say it was a 38% retracement? Yep. Well, shouldn't that stop it in its tracks? Well, a lot of people are going to expect that. And because a lot of people expect that, it very well could become a self-fulfilling prophecy. But it doesn't mean it's going to happen. Okay? So, then what? Well, let's do this. Let's attempt to draw a straight line from this swing high right across here. Oh, it's probably good enough. Close enough. Okay. So the swing high here is, on this candle, is 90.49. Okay. 90.49. So if I were to get this up to 90.49, would I have a straight line? Close enough. All right. Now, you know me, I've got to get a couple ticks to a couple points, depending upon the market, above this swing high. So the swing high's 90.49. The next reasonable spot for resistance to this trade, as I look left, is going to be this swing high right here. Okay. I've also got a 50% fib retracement overhead that I have to respect. So I'm going to create a little area here. Okay, let me open this up a little bit. All right. Now, question becomes at this point, how much room do I have to work with? Well, swing high here is 90.49. I'm going to write that number down. 90.49. Okay. And the swing high of this candle, if I can get a read on it, is 90.95. I'm going to write that down. 90.95. Okay. So, for the sake of simplicity, let's make 90.49 90.50, so it's easier to do the math. What do we got? We got 45 ticks. Okay. 45 ticks from this swing high to this swing high. We accept that there is a potential for resistance at this area. And just above that, we have this swing high, and just above that, we have a 50% retracement at 91.47. Now, if I'm expecting resistance to potentially come into the scene at 90.95, that means I want to be out of that thing before that number. How much? Well, at least, why don't I give myself 10 ticks? 90.85. Now, if I've got to break up above this swing high to even get into the thing, why don't I give myself that same 10 tick luxury? 90.60. Okay. So now we've taken this 45 tick range, and by subtracting 10 ticks up here and adding 10 ticks down here, we've reduced it to 90.85 to 90.60. So how many ticks do we have to work with now? 25 ticks. Okay. Now, we just did a whole lot of work for something that may never happen. Let's say that again. We just did a whole lot of work for something that may never happen. However, if the Australian dollar tonight, tomorrow, or next week touches 90.60, we know exactly what we want to do. We want to be long, and we want to be out before 90.85. Now, if the potential reward is 25 ticks, and it could be more if you're trailing your stop, okay, follow me? Then how much are we willing to risk in search of 25 ticks? Think this through one more level. Given all this information and all this work that we've just done for something that might not happen. Remember, there was another scenario here where we pulled back. We can do all the math and all the numbers for that. I'm not going to today. That's your homework assignment, all right? My question to you that I leave you with today is, with a 25 tick potential move, what are you willing to risk? And what about if you take this chart down to a 4-tick range chart, which will allow you to, if the market is moving higher, most likely it's going to give you an opportunity to get long somewhere around 90.60, maybe a little before, maybe right at it, maybe just a little after, on the 4-tick range. Using the 4-tick range, we know that we never risk more than 8 ticks. And so now, knowing that we have the potential for a 25 plus tick move, how does an 8-tick risk sound stacked up against that? Some of you are nodding your head going, that sounds pretty good. But remember, it hasn't happened yet, and it might not happen. But that's okay. Because, see, sometimes people are confused in the morning. You know, it's 15 minutes into the trading day. You've already got your goal for the day, and you're feeling kind of empty, kind of hollow, and you're going, man, what am I supposed to do now? It's early. Well, whatever markets that you've chosen to specialize in, maybe you do what we just did. Okay? See, the market can only do a couple things. It can go higher, it can go lower, and it can go sideways for a little while. But eventually, here's what's going to happen. It's either going to break out above this number that we've compensated for, all right, or it is going to pull back and touch the BBC. If it pulls back and touches the BBC, you're either going to get an up close and an attempt to move higher up into the same area of resistance that you've mapped out, or you're going to get a failure, and that's going to create a short opportunity in the other direction. So maybe you have 2, 3 markets, 4 that you specialize in. So your work's done for the day, or your trading's done for the day. You now go to your charts, to the market, and you map out your scenarios so that no matter what the market ever does, you're never at a loss for what you're going to do. You know exactly how you're going to behave, how you're going to trade it, what your entry price is going to be, what your target's going to be, how much you're willing to risk. And you say to yourself, maybe, wow, that's a lot of work for something that might not ever happen. Well, question comes then, do you want to be a trader or not? Do you want to learn how to trade? Do you want to learn how to read a chart and then trade it? Or would you prefer to have someone tell you when to get in and when to get out? And if that's your choice, there's no shame in that. Please don't think I'm saying that, because I'm not. And if you have a big stack of money that you just want somebody to watch over and manage for you, then there's certainly nothing wrong with that either. You stand at the crossroads of life right now. You're in this crosshair right here, and you just have to decide which direction you want to go. And sometimes the direction we go is predicated by time or the amount of money that we have. There can be any number of factors that come into play. Okay? If the direction you choose to take is that you are going to actively trade whatever risk capital that you have, and that you do want to learn how to read a chart so that you can learn how to trade, then that's where our free trial comes into play. You spend 5 days, you watch us trade, real money, real time, in front of real people, using a 4-tick range chart where we never risk more than 8 ticks on any trade. You also download the platform, install the indicators, and by day 3, you've seen live trading, you've watched some training videos, now you're ready to put your hands on the controls and start taking some trades in the simulator to see whether or not you can do this. Okay? Trading is not suitable for all people. Trading is risky. You can lose all of your money and then some. Anyone that tells you anything different, you should probably go stand on the other side of the street, because that individual does not have your best interest at heart. Jim says, I'm talking the March contract. This is the March contract, Jim. The 6AH4. That is the March contract. Did you have a different March contract? Jim? Oh, okay. All right. Just want to make sure we're on the same page. Okay, guys, that's it. I'm all done. I'm going to get up and get out. I don't see any additional questions. If you have a question, if there's something I can help you with, send an email to support@cfrn.net. You can call, speak to Michael, 949-42-EMINI. If you need, now, leave a message and he'll call you back. If you don't leave a message, he won't call you back, okay? And if you leave a message, chances are your phone will ring within about 5 minutes, because our little machine tracks us down wherever we are and alerts us and gives us a transcript of the message you left for us, okay? If you want to speak to somebody right now, toll free, 866-928-3310. That's Bert and Leslie. They can help you with your charts, with the indicators, with the platform, with the data feed, any issues you might have. They are standing by, ready, willing, and able to help you. Give them a call. Once again, I want to thank each and every one of you for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.